Guys, can we do a child test on this?
Okay, good evening, everybody. Can you hear me loud and clear? If yes, can you give me a thumbs up? Okay, wow. Well, very fast, 9:30, and we have about nearly 83 people online already. That's fantastic. All right. Okay, I will just wait for just 1-2 more minutes for the rest of the people to join us. Now, today is not a preview, all right? It's not a preview. So I won't be selling anything. Only my last slide, I'll talk about my coming class. Okay, on the 22nd of August, just a simple slide to just inform you and remind you, that's all. So today is a MAO. MAO means this market analysis and outlook, all right? So there'll be no selling, no previews, upselling and whatever, promotional price. Okay, but of course, for those new members today or your friends of friends, if you like what I share tonight and you think that I can help you in your trading in coming weeks, then why not join us, okay? All right, to join our PSV Telegram group chat, you must be a member of a PSV family, all right? Okay, so today's session will begin very shortly, all right? We have 109 people now online, all right? That's incredible. Okay, let me just bring out my chat group. Okay. All right, so as usual, for every weekend, I will start off with this thing called good evening, everyone, and I will type the word good evening, everyone, into the Zoom group chat. I would like everyone who is here now tonight, I want everybody to key the word good evening for me so that this on your handphone or your laptop, you see something is blinking, yep, continuously. That is where we are in terms of asking questions, okay? Now, you do not need to turn on your view cam for today because it's not our PSV session, so it's open. So anybody can join in as long as we abide the same rules. If you have questions for me during the MAO, if I miss your question, it's not I purposely ignore it, but probably because it's flooded by the previous messages. If you need to ask me again, just copy and paste, and then I will try my best to look into it, all right? Okay, so now let's start this evening with the usual thing. Second thing is, how many of you are bullish of the US stock market and how many of you are bearish with the US stock market? Let's begin. Key the word bullish or bearish. Now, you cannot choose between. Either choose bull or bear. Okay, let's choose it now. Bull or bear. Okay, we have this time now more bull than bear now. That's good, that's good. All right. Kangaroo is not accepted, Eric. Okay, so we can see, no, we don't take neutral, Darren. We only choose bull or bear to make it easier. All right, so we can see that this time, this week, we have more bull than bear. All right, slightly bit more bull. All right, so that's the reason why we have this MAO. So every Sunday, you know, after we read each other good evening, we will want to know the bullishness or bearishness in the market. And I believe that you'll be very honest with yourself by sharing. And from here, we can engage to see how traders feel the market. So now we can see still this time around it's more bull than bear. Okay, that's good. Thank you very much. All right. Okay, so now for this evening, we have 142 people are still mounting up. That's good. I will start with this evening by sharing with you guys what happened on last Friday, US market. Then I will go into the my PowerPoint slides to share with you some of the very key economics outlook that I'm pretty concerned for this coming week. Okay, let's just begin by looking at what happened on the US the technical aspect of some of the on the US market with the PSV system. All right, give me a short while. Let me bring you live now there. Okay, here we go. Okay. All right. Are you able to see my Dow Jones chart? Can you see my Dow Jones chart? If yes, can you give me a thumbs up, please? Okay, thank you. Okay, so let's begin. Now, last Friday, we can see a very interesting movement, all right? The Dow basically opens below the cage SL level, okay? That is the support level. It closed open below. So I did mention to you guys that I believe that the Dow will come down, all right, as long as it stays below the opening price. And I mentioned that if the Dow goes down and break 26226, okay, there will be some selling. And I also share that that this technical level to watch out for, this level here, I mentioned that, I told you, right, 26122 is a very important level, 26122, okay? Sorry, 26112, sorry. 26112 is a very important technical level that we must watch out for. That is your PSV chocolate bar theory, advanced level. Now, basic level is for us to go for TP level. The advanced level is whereby we use it as a form of guidance to tell us that, right, if the market, after it hit the TP level but fail to close below it, usually will become a strong support. And you can see on Friday, the Dow Jones came all the way down, broke the 26226 level, and went down lower to 26112. But interestingly, remember I told you, right, the KSI indicator was green in color, meaning the boys are buying. So when such a thing happens, when the market finds some support, and if there's a color change over, that means that the buyer will come back in. All right. So let me now show you live exactly what happened yesterday. I mean on Friday. Okay. Let's take a look. All right. So you can see from the very beginning, all right, when the market opens, okay, the opening price is a dotted white line. You can see that the Dow has a touch OP. Now, touch OP, I reminded you guys many times that when the market purposely touched the OP, it tells you that the boys is communicating. Now, of course, this is PSV teaching. I don't really bother or care whether how people see or perceive whatever I'm sharing, but I think all the PSV students, I think 340 people can attest to it that I said this many times. If the market stays below opening price, it's always a seller market. Now, if the market stays above the opening price, then it is a buyer market for today. All right, it's about today. So when the Dow Jones, you can see very clearly, touches the OP, right, 2 times here, but it was yellow color. But this one, the market purposely touched the OP and pull back with a color change. Yellow turns to red. So therefore, right, it's definitely a sell. All right, it's a sell. So you can see the Dow Jones kept coming down. Every time yellow turns to red, the Dow came down. Yellow turns to red, the Dow came down. Yellow turns to red. Now, take notice of this, everybody. All this point here, yellow turns to red, yellow turns to red, yellow turns to red. There were at least more than one red, right? But more than one red, right? And along the way, there are so-called several yellow, right? But this particular one, do you see this? Yes, this is what we call in PSV single yellow. Now, when you see a single yellow, you know that that means that the red bars, basically the red bars sandwich the yellow bar and the only yellow bar. And usually, if the market is below opening price, right, and the KSI is red in color, there will be selling. Now, what happened here was very instrumental. There was a KSI jump here, whereby the green bar, KSI bar was much longer than the red bar. Okay, so generally you will think that it's a KSI jump, so you think that the buyers are coming in. But there's a problem, guys. There is no triggering at this junction here. That means that this CCRY didn't come with a trigger. So you couldn't have entered here. But when the market look at it, the next moment the red bar came in, the KSI jump again. That means that now the seller has got so strong. Yeah, the red bar so small, right? Meaning the seller have become so strong that you have to be very careful. And of course, this one, this CCYR, the entry bar was a trigger. And therefore, you should sell onto this side. That means that if you have seen this single yellow, you see a triggering point, you should sell. And you can see the Dow Jones really come down all the way and trigger the 26112 level perfectly, all right? Perfectly. Now at this junction here, when you saw this CCRY written to yellow triggering pivot and you went to buy in, were there any wrong? Nope, you did perfectly correct. Just that the lot size you had to reduce. But almost instantly, the market did a CCYR again, and this is again a single yellow. So therefore, you should again cut your long and turn short. So if you had done that again, you have probably made another 100-point drop at this moment, okay? Now, as I mentioned to you before, this 26112 came from the day chart, the chocolate bar day chart. So you can see what happened right here. Right, the market consolidated at the bottom of a 26,000 level. Then it recovers. Interestingly, the color change rate to yellow came in. And what happened? The Dow started to go up, right? Now, this 26112 is not a trigger point. I repeat, it's not a trigger point. But this 26112 is a very important technical point that traders should take a lot of attention towards it, because later on when I show you the US stocks, right, even the Nasdaq too, you will see this very critical point. So if you were short all the way, you should have covered your position. If you didn't cover position, even if you don't want to cover, you should actually, if you are short, you should book your profits. If you are short for longer term, you should hedge your position at least here itself at 26112 level. Because this number has been mentioned several times. I mentioned in the video, on the daily video too, I also mentioned this particular level. And of course, you can see after that, the market really didn't look back. All the way, the Dow went up all the way until the KTR -1 level. All right. So if you look back the whole chart once again, did the boys talk to us? Yes, it did. Did the boys give us chance to enter the short? Yes, it did. Did the boys inform us that these are fakes? Yep, it did. So all these things happened throughout the whole day. And I know some of you make good deal of money overnight on Friday. Congratulations to all of you, all right? So this is the Dow Jones chart, okay? The Dow Jones chart. Okay, so any question on this one? No question, right? Okay, no question, I will continue. Let's look into the gold market, shall we? Now, later on, I'll be talking about gold fundamental. Today will be quite interesting because it will be something that you'll be like very surprised, because the way I'm going to share about gold, it's probably going to twist your mind a little bit. Okay. Now, what happened is that gold on Friday, the interesting thing is that the opening price is actually at the pivot 1 level. Now, this pivot level, I told you before, is automatically calculating itself at 6 a.m. every morning. Now, what happened is that this is an inverse pivot, 1955 and 2013. You can see the inverse pivot. Normally, pivot 2 at the bottom, pivot 1 on top, right? So what does inverse pivot tell us? Inverse pivot tells us that, okay, the pivot will become very, very sensitive and also very powerful, which means that if the market trigger the pivot, whether it's on top or below, then you have to follow the rules. If the rules say buy, you have to strictly go for the buy. If the rules say sell, you have to follow the sell. Okay, this is going to be very powerful, very important. So what happened was on Friday, the opening price was at this pivot 1 level. So I was very distinctly telling people that if the market trades below pivot 1 with a CCYR, you really have to sell. But if the market stays above the pivot 1 with a CCRY, red to yellow, then it will be a buy. Okay, I think this one is very sure, very clear case. And let's see what happened. All right. Wow, we are 181 people, all-time record. Okay, my God, thank you very much for all this strong support, guys. Okay, so what happened? Let's take a look on the gold market, shall we? Now you can see almost instantly the gold reacted accordingly. So gold, when it opened, it was sideways. But you can see now, this is a single red. Now, single red means the left and right candle, yellow bar sandwich the red. Now, of course, Single yellow means the market is going to come off, right? No, so single red will happen. Now single red will be a buy. And of course, this happened to be a zebra formation at the same time. So this is something very clear. And of course, at the bottom, the KSI was green. So this one tells you that the boys are coming in. So with the pivot being inverted plus the color bars opening, KSI, no blue bars at the bottom. Now, when there's no blue bars, means the market is bullish. So all this thing tells you that it's going to go up. So that's why if I move the chart to this way, not to tell you hindsight story. Now, the difference between we and other traders is that other traders, when they see this, they tell you it's sideways, consolidation, unsure. But for us, PSV trader, you know that this is a zebra. You know that the color changed from red to yellow. You also know that the KSI is green. You also know that the blue bars are no longer available. So this tells you bullishness. And of course, plus inverse pivot, that's where things have to move. So of course, you can see what happened. The gold went up all the way. Now, the thing is this, just to jump the gun a little bit. All right, now we all know that why is gold going up. There are a few reasons. Number one, predominantly is because of the dollar is weakening. The US dollar is weakening. So because of that, people are buying gold. Number two, there are also a lot of speculators coming in to buy gold recently because now gold is at all-time high. Some people jump in to buy gold to push up, to buy, to speculate on gold. Number three, people who are heavily invested in the stock market, they felt that, right, since the gold is going up at the same time, why not do a hedging here? They should buy gold and buy stocks at the same time. So if the stock market comes down, the gold will be able to give them some profits or maybe hedge a position. Now, I would like to say that this strategy has a bit of problem later on in the second part of this session. I will share you why am I saying that, okay? Now, of course, the last thing is that there are people saying that, right, the US dollar will crash and US dollar will become obsolete because of all the debts and stuff like that. Hence, therefore, gold will be a better bet. Now, again, like I say, I don't think so, but maybe later on during my second half sharing, I'll tell you why. But nonetheless, gold went up all the way to KTR plus 3. And that is whereby I always tell people this, when market hit KTR plus 3 or hit KTR minus 3, please consider to book profits. If you're long, right, do take profit because the chance of market going to KTR plus 3, plus 4 is really very low. Now, of course, there were incidents whereby such thing happened, but it's going to be like once in a blue moon thingy, all right? So you don't need to have the hope that it will go even higher. So that's why PSV system already help you to remind you not to chase. And I know that some people chase gold into at 1981 level. I know some people buy gold at 19. I know someone bought gold at 1982. Oh my God. I mean, even though I do expect gold to go higher, but not like that. You don't chase gold at such a level. Then when the gold came down all the way to this point, 1959, it means that you are down by almost $30. I mean, you couldn't freak out yourself, right? Things like that. So don't do that, my friends. Okay, this is my personal take. So when gold came down, you can see, interestingly, it hit the KTR plus 1. It stays there. It doesn't go down further. And then it did a CCRY again, and therefore gold went up. So in short of that, right, in my opinion, gold, if you look at it one more time, right, when it's above OP and such a case whereby it's inverted pivot, you should know that all the CCRY, red to yellow, if you choose to buy, you should be okay. But if your trade can come with a trigger point, it will be even better, okay? It will be even better. So last Friday, there's only one KCX signal, only one, whereby the thing, you can see that it's blinking right at the bottom. So the KCX signal blink, that means that market hit extreme. So at this next color change, red to yellow will be a buy, and you can see rather easily the money was given. So that is really why a lot of people are using trading gold and making money. All right. So for friends of friends who are new with us, okay, you want to know more, please speak to your friend. I'm sure that they will be able to assist you. For those who are with Trade the Boys page, don't worry if you think that whatever shared tonight, you like it very much, you can join us for my 10 intake, okay, on 22nd of August. All right, so I've covered basically what happened on gold market and also what happened in the Dow Jones. All right, let me just share you a bit of the Nasdaq, shall we? Now this is the Nasdaq day chart first. Okay. Now you can see how incredible is our system, right? Because when the market opened for Nasdaq, the pivot one, 10697 was there. Pivot 2, 10506 was also there. So and you can see when Nasdaq came down, right? It came down all the way and it just marginally missed the pivot level of 10697. But if you remember, I told you before, if the bar is coming down and there's a yellow bar right beside you, there will be a usage of the chocolate bar, right? So apparently the chocolate bar on that day, on Thursday, was this price, 10707. Of course, different brokers were different, but since all of us are using the same broker, so it's quite easy. Now, I told you, right, when the market is coming down, any yellow bar will be used for chocolate bar. And apparently 10707 was a chocolate bar. And you can see what happened when I turn this chart to 15 minutes. Okay, you can see, wow, look at it, okay? The Nasdaq in the morning went up first, then it came off, broke below opening price, so you should sell. And when it came down, you see that it hit the KTR -2 perfectly and then rebounded. Then for some reason, as if that they know our opening price, you can see it consolidated around the OP. But when this point came in, this is where the real stunner come in. You can see when the yellow bar turns to red and the red bar actually did a touch OP, right? Can you see that? Let me make it bigger for you. The red bar touched the OP and that was where the boys have communicated. And look at the KSI. The KSI literally jumped down. That means there's a lot of selling in the market. What happened? So the market fell all the way. It came down. Okay, it came down all the way. But what was crazy was when it hit this point here. Take a look here. I told you, right, the number 10707. Look at it. The market really hit that point very nicely, stopped there, and then created a CCRY, which of course saw the Nasdaq recovering all the way back to almost the OP level. So you can understand why am I saying that this chocolate bar, this basic and advanced level is very important. Now, what is going to happen for all the PSV members is the good news is I'm going to probably put this extra new feature inside this PSV system. All right, we are still now doing the back end. So when I'm talking to you, the programmers are still very busy at the back. So once this file is really completed, we will be sending it for you guys. All right, as long as you have subscribed to our PSV indicator, you can get the free upgrade. But don't contact Ben first. Wait for a while. When we are ready, we'll send this to you. All right. So this is something a good news for everybody here. Okay. All right. So that is the Nasdaq, and let's look at S&P 500, shall we? Now for the S&P 500, you can see the same concept was used. Okay. The same concept was used. See, this is a chocolate bar, all right? So the level was 3222. The S&P level 3222 was mentioned to everybody. And the KSI on Thursday was red. So I did say this. If the S&P is to come down on Friday, it will come down all the way. And there's a technical level at 3222 because on Thursday, it actually got supported. So Friday, I do suspect it may happen again, and it really happened. All right, this is really crazy, guys. This is really incredible. All right, so you can see what happened on the Friday market for the S&P 500. So the S&P 500 basically was coming down as expected, right? But what's important was when the market crossed here, CCYR, yellow turns to red, all right, triggering KTR2 and KTR3 at the same time. So we know that this is going to be a pretty big selling. But of course, the question is, Kel, it's already KTR -3. Can we still sell? Well, based on rule, it's a yes. But if you are, if you are concerned, then you can just skip it. Now, what happened was, look at it. The price came down, then it reversed, and the high of this yellow bar touches the KTR -3 as if that they know this is actually the support resistance level. And of course, it came back down. But what is crazy was the moment it hit the 3222 level, it just stopped there. So look at it. It's the same thing that how gold perform, how Dow perform, Nasdaq perform. It's like this chocolate bar theory that I've been talking about. it has its real merits in it. And of course, for people who like to pick bottom, pick top, right, this is going to be very powerful for you. And you really need the PSV chocolate bar to help you. You cannot just randomly take any candlestick and do it. You need to have the colors of the PSV to help you to get the right one. Okay, so this is something very, very important. And of course, you can see after that, the market stopped there, reversed, and went all the way up. Right, this one, if you're going to validate whether I say this 3222, you go to my last Friday MAO online, you can see I did say the S&P 500 must stay support at 3222. Now, for those people who watch my Friday MAO online, if you can validate that I say 3222 is a support level, can you give me a thumbs up if you remember that? Okay, good. There's quite a few of you guys remember that. Fantastic. Now you must remember this because later on, right, I'll be sharing the same thing for you regards with the the US market and the gold market and also the FANG stocks. Tonight I'll be covering a little bit on the US stock market. Okay, so let's just begin on this. Okay. All right, so give me a short while. I need to turn on my PowerPoint. Oh, I missed up. Okay, give me a minute. All right, just give me a short one. Now, while we're waiting for the PowerPoint to turn up, right, my wife asked me this question. Look, Monday to Friday, you work fine. Saturday, you also work. Sunday night, you also work. What do you want? Well, I told her this. I mean, I do a lot of research over the weekend. I found that if I don't share this thing with you guys, I find that it's not right because I don't want you to be trading the market and then get yourself hit by the boys. Now, like last week, I tell everyone to be very careful on Tesla. I said that as Tesla share will be coming down, and indeed it happened. And I also tell everybody that the Nasdaq should pull back, which also happened. Of course, the last minute it recovers. I can't help it, but at least the selling wave, you guys caught it. And I also warned that gold may be coming down soon, and basically it happens. So basically, in my opinion, if I got things in my mind, I should share with everybody. Now, if you make money, I'm very happy for you, okay? If you use it and do well, right? I think that is something that I feel glad that all these things, this good thing happened. Okay, someone asked me about Apple, whether, how is it after the split or before the split? I will share this. Right, tonight I cover quite a lot for you guys. I'll talk about Apple also. All right. So those who ask me on the site with private question, don't worry, I'll come back to you. Okay. So my PowerPoint is ready. So let's take a look now with 187 people online. Oh, that's fantastic. You guys are solid. Okay. Let me just put on my sharing screen. Hold on a minute. Okay, all right. Okay, are you able to see my PowerPoint slide, my full screen? If yes, can you give me a thumbs up? Okay, thank you very much. Okay, so if you guys can hear me loud and clear, let us begin. Now, first of all, my caption for this tonight will be, must you be careful for August 2020? And my answer will be a big, big yes. Careful, right? Really careful, okay? I'll be sharing you some of the major concern and major economic highlight to watch for this coming week from 3rd of August to 8th of August, okay? I include Saturday is because US market closed on Saturday, Singapore time, right? So it's like 8th of August. Okay, let's just begin. All right, so first of all, like usual, because there's a lot of information to share with you that basically I took from the internet. I make sure that I get I follow pretty good YouTubers. I validate what they say, did my due diligence too. So nonetheless itself, right, I still want everybody to give me the disclaimer by keyword disclaimer into the Zoom group chat to tell yourself that you know that I am going to share my personal view of the current market, right? You have to do your own due diligence. All right, before you invest into the market, okay? I'm not liable for any losses, but if you make money from my sharing, do donate some of it to charity. All right. Thank you very much. I appreciate that. Now, if you donate to charity, do me a little favor. If you can, just mention my little name. All right. So at least I get some good karma. Okay. Thank you very much. Okay, guys. Okay, let's begin, shall we? All right. So let's recap what happened last week first. Okay, there were the techies earnings, the FOMC. All right, let's take a look what happened on last week itself. So last week we know that the stock basically all closed higher, especially the big stocks, big tech stocks. Sorry, all right, because their earnings was fantastic. We have Apple, we have Facebook hitting record level. We have Google advertisement revenue drop because of the pandemic for some reason, not too sure why, but it dropped. And of course, we have Amazon that also recovered, but market slowed down when it has strength involved. So we have a bit of mixed picture for the techies, but primarily the main focus was on Apple because Apple broke above the 400 level mark and they also announced a stock split. Later on, I will share with you, right, what can you do or should do or expect from the stock split, all right? So I'll come to that very soon. So that's what happened. Primarily, it was because of the tech stock that leads. Now, this is very important because later on, right, we'll revisit this area. It is because the tech stocks that led the recovery. As a matter of fact, if the tech stock did not recover on Friday night, the Dow should be down 200 points minimally, all right? And the Nasdaq should be down by 100 points. But the thing is this, because of the tech stock, things totally change. So I want you to take note of that because I believe that next week onwards, if the US dollar is to strengthen, then the tech stocks might take a dive or may have some profit taking. I'll talk to you about that shortly. Yeah. The second thing that is actually in the market was Federal Reserve leaves rate unchanged and promises more support. So Jerome Powell was pretty clear. I mean, he was just telling the press that, look, all right, they will use all the tools that's available to support the US economy. Now, during the session, after he said that, the market was okay, but toward the last hour, the market slowed it down. So it's either that people sell into strength or they don't believe what he says, okay? But nonetheless, itself, he did say that anything that is in his toolbox, he will use it and he will make sure that he support the US economy. And he did mention this, the US economy performance, right, actually is very highly tagged to the current coronavirus problem. If the coronavirus problem can be resolved, then he believes that the US stock market and economy, will be recovering. So that was what Jerome Powell says. All right. Now, remember back then itself, Jerome Powell has this thing with Donald Trump. Jerome Powell did say that he wants the dollar to be stronger. He did say that the dollar should, at least won't lose strength. But Donald Trump, US President Donald Trump, insisted that he want a lower dollar, and he really wanted, and he even in a way scolded Jerome Powell or the whole entire Federal Reserve. Now, I did some research on this, and I realized that probably I understand why now this tech stock are going up. I also understand why Donald Trump really needs the US dollar to weaken. All right, so I'll share with you more shortly. All right. So the third thing that really hit the market last week was this thing, the US economy, right? Apparently the GDP quarter to quarter plunges about 32.9%, all right, in the second quarter, and the jobless claim rises for the second week. So, I mean, minus 32.9% is the biggest decline ever since 1940s. Now, I mean, seriously, if there's any time whereby we see a minus 32.9% in a normal time, the non-pandemic, right, the market quite crashed long time ago, maybe down 3,000 to 5,000 points a single day. But because it's a pandemic problem, apparently the market seemingly don't really bother. And with the Federal Reserve coming in blatantly supporting the market, well, it seems that people kind of accepted it. So the thing is, people are now looking at the recovery coming in the third quarter 2020. Now, I cannot be sure this will happen. Right? I can't be sure because I'm not I'm no expert here, but based on what's currently I'm looking at it now, I don't think so, in my personal opinion. All right, so this is the third thing that basically hit the US market, but the market was hardly, disturbed by this. Very surprising. Okay. Then, of course, because of that, the US shut down since to send the GDP to the worst plunge since 1940. So this is the chart view of entire last 70 years. So you can see that all along where there were the change in the GDP numbers, it was within maybe about, the lowest was about -8 to the high was about 12 to 15%. But never have you seen 30 over percent. You can see that this is really crazy numbers. All right. So of course, the last time we saw something like this was all the way back in 1929. And that was a depression period. So I'm not too sure will we revisit there, but at least numbers tell us that we are already at those crazy level compared last 70 to 90 years. Okay. All right, hold on. Someone is drawing on my screen. Okay. All right, actually I changed my annotate, but never mind. It's okay. Small little thing. Clear first. That. Okay. So now what it's going to see is that the economic growth has gone. So whatever that happened the last 5 years, you can see the last 5 years is all wiped out. Meaning you take all the gains minus all the so-called downside. You can see that, all the losses. Okay. This single bar probably kills off everything. You can see right over here. So once again, that means that, right, the last few years of economic growth is basically all wiped out. All wiped out. So the question is this, all right, what should it happen next? All right. So of course, Donald Trump, you can see very interesting. He did mention before that he will, he back then, 3 months ago, he said that the US presidential election should continue. But now he said that he wanted, looking at to delay it. So it's like very funny to me. I mean, it's not possible. Let's put it face away. It's not possible under his power to actually be able to delay the election. So of course, why is that? Because obviously the current polling doesn't seem to be helping him. So that is what happened over the US market. So now I have a few segments to go down with you, and one of them now is Apple. So what can you do with Apple? Okay, let's take a look. Now we know that Apple shares basically announced a 4-for-1 stock split. I mean, every 4 stocks are split for 1. Okay, so this is the fifth time in the Apple history, the 5th time they are doing this. Okay, that means people now can actually buy Apple share at below or around $400, about $100. Yeah, that means what's Apple share now is about $425. So 4-for-1. So that means that you can have more of this Apple share floating the market at a cheaper price. Okay. So the thing is this, I've been receiving a lot of questions asking me, what can we do with Apple shares? All right. So let me just do some history checking for you. Okay. So I really did a lot of things for you. Take a look now. Now, basically, in 1987, there was one split, but that one is really all long time ago thingy, so I will talk about it. So I bring back the last 3 and 4. Okay, you can see right here. In year 2000, Apple did a stock split. Okay, then it was 2-for-1. You can see the share came down. That came down is not because of the stock split that the share came down. Then in February 2005, there was another stock split, 2-for-1. Then in year 2014, June, there was a 7-for-1. 7-for-1. Okay, and today is a 4-for-1. Okay, so I did a little bit of research for you. So this is my personal gathering. So basically, from year 2000, year 2005, and this 2014, you can see that after the stock split, right? Usually the first week or second week, there will be a little bit of downside. I repeat, there will be a little bit of downside, okay, for the first 1 or 2 weeks. But once that thing is over, like a fever, after you get a cold, get fever, then after that you're back to recovery. Apparently, Apple shares after that usually recovers and go back to where they came from. Can you see that? So this is very interesting. Okay, so if you were buy Apple share back in 2014 after the split, all right, you could have seen your share basically, wow, going up several folds over the last 6 years. Okay, now the only concern is that this time around, the fourth split, sorry, was done at a price of about $600 over dollars. But normally when they have a stock split itself, right, you can see that, you know, the stock split here is at 600, but this time now it's only at 400. So the concern is it did not really go back to where it was. So technically, is it overvalued? Technically, is that right? Do you think that this is not the right place? So this one, we have nothing much to say. But again, history has shown that first 2 weeks, there will be a little bit of downside. But after that, Apple share usually rises. Okay. Of course, you must see also in terms of timing. Over here, it rose up, right? Then after that, sideways came back down, almost back to where it started. But after that, that was where it began its big rally until to date. All right, so in terms of cash flow, Apple has a lot of cash and it's stashed mostly in overseas. So that's why Donald Trump really wants them to bring it back home. So I'm not too sure if it was done, but nonetheless, this is Apple history. So if you ask me for my personal take, well, I am no longer an Apple fan. I used to be an Apple fan, but I stopped buying the phone because I think that it's getting more and more expensive, and I don't see the value for doing that. But very surprisingly, the Apple latest handphone sales was so good, even though it was during pandemic. So my question mark is this: I cannot really answer you that. Okay, so if let's say you go back to history, it seemed to be a very good buy when the market pulls back, so you can look out for that. But in terms of price to price, in terms of trend line, it feels like you see that there's something like a technical trend line here, which may tell me that there might be a form of resistance at this price here. Okay, so this is the Apple stock split history. Okay, all right. Will the Apple share split affect the Nasdaq? I don't think so, because it's still the same thing here. All right, again, I will check it out for you, but I don't think so. This is my personal take. Okay, all right. So that is Apple. Now, the next thing I'll share you tonight is this one. Is the US banking industry. Okay. Now, I think you've been hearing me out very loudly. I've been saying this. If you really want to short an sector, or industry, right, then I believe that the US banking is one of them. But of course, not all the bank shares, certain of them. And if not, will be the airline shares. I know by saying this itself, right, it's going to be tough because we can see that they're having some support at the moment. Yes, correct, there are some support. But the support is because of what the Federal have been doing. But if, let's say, if the coronavirus continue, right, I believe that these two industries will get hit. And that's the reason why I also believe by Warren Buffett, he basically unloaded his banking shares and also the airline shares. Okay, I'll share with you with more now. So basically, you can see what happened is that when the pandemic lockdown came in, Dow Jones, the S&P 500 in this case, from about 3380, right, it came down all the way until about 2200 level. That's a lot of points. Huh? Then after that, because of these counters, Google, Facebook, Amazon, Apple, Netflix, the five of them plus Microsoft and Tesla really pushed the market all the way. In fact, the 5 plus 2 of them, 7 of them, right, basically takes up nearly like 30% of the entire rally itself. So they are really the big movers. All right. So obviously, we know that they have the chief executive have went for their so-called House of Representatives panel. And even though there was some cybersecurity issue and this so-called competition security issue, by the end of the day, it's just like more like a walk in the park. All right, I don't think anything will happen. And of course, the earnings basically covered the entire thing itself. All right, ignore the words at the bottom. I have no time to change this wording here. So what happened is that you can see for the bank index, bank got an index. This index tells you that since March, the index has fallen more than 50%. But while the Dow Jones had did a V-shaped recovery because of the 7 counters I mentioned earlier, but the banking sector, all right, doesn't really move the same way. In fact, during the June rally, it did try, but it fizzled off almost more than halfway mark already. So what I'm trying to say is this, very simple. Now the bank rate, now the interest rate is very cheap. So of course they borrow from Federal Reserve, cheap money, and then they reloan it to the market. But the problem is that now the rate also universally is very low, right? So they can't charge too high. So now what's happening is that even though there's some profit here, but this profit is nowhere near to what they have been enjoying the last few years. So now the thing is this, right? If the interest rate really continue to stay low, right, then the banking sector will suffer. The banking sector will suffer, okay? So this is something that I want you to take note of that. So the thing is, if the bank sector really need to recover, then interest rate theoretically has to go up. But of course, if you tell any economist, any analyst, tell them that, hey, US economy need to recover, so they need to high interest rate, I think no one will buy this story. Okay, but again, I have my reservation on this. I'll show you and share you more, okay, coming soon, all right? So what is happening is that I did a bit of research for you, and I realized that this guy, the legendary investor, who is a so-called once a sidekick for this George Soros, all right, this guy, Stanley Druckenmiller. Now his strategy the last 2 years was amazing. He just do two things now. He basically long the tech shares, and he just short the bank sector area, some of the bank shares. So he's basically very surprised. In his own words, I thought credit bubble had burst when COVID hit. Okay, this on CNBC. So apparently, well, this is his personal take, but I realized that this video was taken about a month ago. So that means theoretically he is wrong with this so-called call in a way. All right, but nonetheless itself, right, this is a billionaire, a legendary investor saying this. So that's why I purposely took it out and share this with you. So it's a big boy's concern. And of course, if you look into history, back then in 1999, it was a tech stock mania, whereby all the counters went berserk. But of course, then that was where the Nasdaq came back down. Okay, this is S&P 500. Then after that, after about 10 years later, okay, we get to see the next movement is a mortgage loan crisis. And of course, S&P again fell. All right, so this is what really happened. Now, back then, the Federal Reserve was not involved really helping the economy back then. It was only in 2009 that was whereby Federal Reserve really came in to really support the market. So since 2009, you can see that the Dow Jones, S&P 500 in this case, went all the way up. So the question is this now, we have the tech crisis or mania, we have the mortgage loan crisis. Now, today, would it be a bank credit fiasco? All right, this is something that, the question that I think of. And of course, you can see right now, will it be the pandemic by the coronavirus cause a problem, or actually by that itself is a bank credit crisis? Now, why do I say that? Because end of the day, how does bank has its revenue? Other than their own investment, the main thing is that they actually loan the money out. But you should know that if they lend the money out and people don't pay or default the payment, then what's next then? Then that is always a big concern. So now if you're a bank and you know that people are going to default loans in the coming months due to the current coronavirus, so the question is this, will they even bother to even lend out money? So no matter how what do you call from the top, they want to stimulate the economy at the bottom, but if the one that controls the funds or the money doesn't really want to provide the credit or the loan facility, right? So the question is then what will happen? So that is my very big concern here. So let me show you something very important. This is the US dollar index chart. Okay, now this dollar index chart, you can see very interesting. This one is drawn by one very good technical guy, which I always follow him, Norman Trader. Okay, you can just Google him, Norman, Northman, Trader. All right, basically this is his drawing. So I just took it out of context from him. So he shows that this is the US dollar index movement. Okay, all right. Sorry, this is not Norman Trader. This is my bad. This is someone else. Sorry, my bad. Okay, so this is the dollar index movement. You can see very interesting. The trend line since 2012, all the way stretching all the way here. Okay, so what you can see interestingly since the 2002, the top line, if you draw the connection itself, you can also see the very strong so-called resistance. So now what we saw is that the dollar came down recently, and that dollar moved down causes gold to go up, right? As you can see. Now, the something that probably you know or not many people know about this is that when the dollar starts to go down, right? All right, under Economic 101, when the country currency goes up, usually the stock market follow through. But there are countries whereby if the currency actually weaken, it actually benefit the stock market. And one of them generally we know is that the Japan, whereby if the yen was strong, the stock market actually fall. If the yen was weak, then usually the stock market recover. And for some reason, apparently US has started to become like that. Now, what is the rationale? It's because of the tech shares. I'll explain this shortly. So what happened is, now we can see the US dollar index has came back down and it hit the very common technical level. Now, I want you to take a look here in early 2018. What happened? That the dollar index came down from 103, came down to about 87, 88 level, okay, in 2018. So take a look what happened. Now, apparently, since 2018, the Dow was going up when the dollar index was, coming down. So the dollar index was coming down. You can see right here coming down. The stock market was rising up. But the moment the dollar index had to recover, strengthen, you can see that the stock market came down very, very dramatically. Okay? So the thing is this, was it because it was just only the dollar, or was it because of fundamental that led the dollar, the Dow Jones to come down? This one, you can do your own due diligence. I'm just showing you compare and contrast in terms of figures. So if I look back again, 2014, I saw the same thing. The dollar index was at a high about, then was 83. And from 83, it dropped down to about 77. Okay, and the moment, and when it hit a technical point, 77, it stopped there and recovered, right, dramatically. And you remember, right, what happened in 2014? In 2014, the Dow Jones again nicely, exactly came down. Okay, came down. Then after that, then it recovers up. So the question is this, is the dollar index able to foretell what will happen soon? I really don't know. So of course, two sides of the coin. Now, if you believe that this technical line will break and come down lower, so theoretically speaking, gold will muscle through to $2,000 level, okay? Because what is true, right? If the dollar index to come down further, then gold to hit 2,000 shouldn't be a problem at all. But and of course, the stock market should continue to rally. Okay, but if you look at this trend line and you believe that this trend line can tell you that there will be support coming soon, or the dollar may recover for some reason, then after that, then that means gold could be coming down. I repeat first, if the dollar index really for some reason finds some base and recover, then I'm going to be very upfront with you, likely gold will pull back soon. And of course, if that happens, likely the stock market will also pull back. So if you look back into history, back in early this year, March, right, where the stock market, the Dow came down by almost 7,000, 8,000 points, you also saw that the gold market also come down at the same time. So that is something that maybe can history repeat itself? I'm not too sure. So I dig out some fundamental to support this saying. Let me just show it to you now. Right, is this. Now at this moment now, you can see that this is the real GDP, the one in blue, right, that basically have caved down. You can see the blue line have pulled back down all the way here, okay, versus the Wilshire 5,000 total market cap. Now, this is basically the Warren Buffett indicator. So you can see at this moment now, the Wilshire 5,000 total market cap is at all-time high level, all-time high. Okay, so what does it tell me then? Basically, it tells me that, right, the valuation itself is way, way, way above normal. And this is going to be very dangerous at a very dangerous level. So basically of that, right, let's look deeper on the US dollar relationship with this overvaluation of the stock market. Let's take a look. Now you can see this. After all, a weaker dollar is typically seen as a positive for the US economy and for big multinational that book a large chunk of revenue overseas. That means that it's basically companies as the big MNC that has a big large chunk of money outside. All right, so in short itself, right, as long as these MNCs, they will want a weaker dollar, And if that happens, usually the stock prices will be reflected, and especially in a way good for the US economy. So apparently it shows that, right, a weaker dollar actually looks pretty good for them. Okay. So you can see that, right, this is on CNBC, stocks and earnings could get a boost from a weaker dollar in 2020. So apparently you can see right here now, the dollar is expected to see at least a single-digit loss, which could make US goods and services more competitive on the world market. So now you can understand why itself, right, the prices of this US manufactured goods are like Apple itself, the price keep on going higher, because they say that it was the US dollar, it got weaker, and then that will become more competitive in a way. So in short, the stock market, right, that's rising now is driven by the 5+2 counters. They are all having so-called revenues are outside US. So the lower the dollar goes, the better for them, apparently. So now you understand why Donald Trump really need the dollar to be down and have been staying pretty close with some of the CEOs in US for tech counters. So you can see right here now from CNBC, once again, these are the foreign sales as percentage of total. You can see all these counters are the one that have a lot of sales basically outside the US. Okay, and of course you can see all the top names are there. So the market already expected the dollar to drop between 3 to 5%, which already happened. The dollar has lost about 8% from its recent high. And apparently this slide is actually good for the corporate earnings. So again, although we can understand why in terms of this angle, but generally when we talk about a dollar coming down, it's actually not good. But if it helps the big techies, then why not then? So this is now you understand where I'm coming from. So as long as the dollar is weak, it actually helps the earnings of the techies counter. So as long as the US dollar is doing weak, it's good for them. And if it's good for them, that means the stock price can go higher, you can support it. But conventional education or conventional economics doesn't really talk about this way. Usually a weakened currency is bad, actually, all right? So you can see more on this. The president has been very, very effective in achieving the market outcomes that he's been thinking about. He wanted a weaker dollar and certainly wants it in the coming election, because a weaker dollar causes export to be stronger, not to mention S&P 500 earnings, okay? So now the thing is this, if you believe that Donald Trump will win during his re-election, then of course he will likely drive the dollar even lower. He will drive the dollar even lower to probably make some of his people very happy. And of course, by doing that itself, right, he will likely get re-elected. So if Donald Trump really get what he wants, then of course gold can go much, much higher. Okay, 2218 is a level that I mentioned, and I will still stick with that, 2218 for gold. Now, of course, if that's the case, then based on what we've been seeing now, then of course the Dow Jones may cross back 29,000 to even 30,000 level, right? All right, it is possible. Mathematically, it's all possible. That is on the surface that the dollar actually continue to slide. Okay, do remember that, Okay, so the thing is this, can the dollar slide? Well, this is whereby I've been thinking to myself, and just now when I was looking to do some R&D, then this thing came on board from Bloomberg. Markets can't stop thinking about Federal not thinking about hiking. Now, basically, if you ask any expert in the market and you ask them, will you think the Federal will hike rate? I think everybody will laugh at you. I think so, right? But I am always a guy who is a little bit different. I like to challenge this thing. So I asked this question now. Last month, we saw the CPI number increasing. Last month, we saw the crude oil have traded about 40, 41 level. Last month, we have unemployment again rising. So if cost is increasing and people are getting unemployed, will inflation come in? I think it will, right? This is something economic 101. So if that's the case itself, if the inflation starts to creep into the market and there is no way to bring it down, then what do you think the central bank will be doing? Okay, and you also heard me earlier, the bank industry are not doing well because of the current low rate. So if that is going to be a low rate, then how can they help the banks? Now, of course, the banks, Jerome Powell have already said in his meetings several times, and he said that there will be no much chance to see an interest rate hike. Now, of course, we always hear this from all the last few so-called Fed chief all say something, but for some reason they have the way to turn around and do the other side. So of course, you ask me now, at the current level, does it have any economical reason for the US to hike rate? I can't see there is not. But in terms of, let's say, if US Federal Reserve is supposed to be a check and balance entity, and if, let's say inflation is really coming in, all right, and people are losing their jobs, right, this is going to be very dangerous, because as you heard me under now, imagine if they really had to hike interest rate, definitely the dollar will recover. And if the dollar recover, what will happen to the stock market? The earnings will not be fantastic. So obviously the tax counter earnings will be affected. So you understand my point now? So of course, again, what can we look out for is a few things. Number one, observe the dollar index closely. If there is any form of people or the boys buying in anticipation of something, we will see the dollar index going up by itself. All right, there's something that you can take note of that. So you can see what happened back in 1999. You can see the so-called the Wilshire 5,000 GDP numbers. Now we are definitely at an all-time high level for this particular indicator. All right, even higher than 1999 observed movement. So the question is this: are you going to chase stocks at this moment now, or would you want to wait for a while, pull back, then you buy, or would you want to short at a high and profit from that? I will leave it all to you to decide. But this is something the most updated from Bloomberg. Okay, last one until 30th of July. Okay, until 12th of August. Interesting date. All right, Ken. So this is the sharing with you until here. All right, now this is from Norman Trader. This is the one. So what he did was that he did a drawing on the Nasdaq. So what he did was a bit of wedge formation. He just clicked the high to high to high to high and did this extension. And of course, he took the low to low and did the extension. And he said this: now the Nasdaq, although has recovered the losses on Friday, but apparently it seemed like sticking at the beneath of this so-called trend line, the one he drew. And what was incredible is that he actually, then what he shared is that this is what happened back in year 2018, where the drawing was almost identical. This one he drew himself, and the market also did the same thing, touching the trend line. I mean, so-called this wedge formation at the bottom. But once the market loses track, loses foothold, that was where the Nasdaq came down quite a fair bit, from 7,600 dropped until 5,900. Okay, so what he did was he just compare. This is what happened to this is what happening today, and this is what happened in 2018. And if you believe that this is exactly what happened very soon, then of course, logically speaking, then there might be some pulling back of maybe half or quarter of this magnitude. All right. So this from Norman Trader, okay, on the Nasdaq. So the thing is still, it doesn't answer, all right, why would the dollar go up? So like I say once again, is because the dollar index chart that tells us that there might be a support coming in, a strong support. Number two, if let's say the unemployment data continues and in this so-called consumer price index start to recover or go higher, then of course this is going to be a sign of a bit of inflation. And that's why if the what do you call this Federal Reserve, they have to do something, I mean they have to do it when they do it. So there's something to be taking note of that. Okay, so now you can also see that gold prices have hit all-time high already because of the dollar that's dropped. So the dollar really plays a very big part here, right? If the dollar do continue to drop, gold can go higher in this case. But of course, if the dollar do recover, then a lot of things will actually get hit at the same time. So just take note of that, because now we can see gold is at all-time high level, okay, where the dollar drops. Okay. So the thing is, to my opinion, is that, right, all the time we've been talking about is all about the surface economy. How about the real thing? How is the people in the US, how are they really coping with it? And how can we use these figures to remind ourselves that not to go crazy with our chasing after stocks? So let me share with you now. First of all, we can see this is the latest update, right? About 70 million card holders have credit limit cuts. and cut accounts are closed involuntarily in the past 60 days. That means that the banks are closing down the credit card limits of people. Whether they pay on time or they don't pay on time, they just go for the cut. So think about this, Americans really survive mostly on credits. And if they don't have this credit, then what will happen? Now we can understand why the banks are closing this credit facility, because they are afraid that if they do extension itself, right, and people can't pay, they go to bad debt. And of course, things may have happened again back in 2009. But the thing is that if they're not going to do this, then how can the people survive? So this is going to be a very, very tough call. So from Yahoo Money, banks are closing credit cards and slashing credit lines, credit limits amid the pandemic. All right, this is the latest on the 23rd of July, not months ago, but just recently. So banks are rushing to close credit card accounts or slash credit limits to curb their risk. You can see that. In fact, 1 in 4 Americans with credit cards says that their account involuntarily shut down from mid-May to mid-July. I mean, just only recently. So imagine these people now, they don't have this credit facility, and if they go around and couldn't get, then what will happen? This is going to be terrible, right? So of course you may say that, but well, in US, there are people doing that. They take the money from the coronavirus aid and go and buy a Lamborghini. So imagine that you have a loaf of bread thrown down, but only crumbs really reach the bottom. That's why people are having that sort of problem. And these people who are much richer, they find their own way to get the aid, and then end of the day do silly stuff. So it's like, you know, think about this. You really want, as a president, you really want to help the economy. But the thing is that the loaf of bread, when you throw down, you know, it really reach the bottom, is only crumbs. So that is, if you only have only crumbs, what do you expect the economy to do? Right? It's something to take note of that. So of course, don't buy expensive car. They can do this. They can go into trade in the market. Now, recently, Kodak share, oh my God. I mean, when I hear this news, I almost fainted. I mean, all my life, I know that Kodak shares are supposed to be for films, but apparently they have stopped that business, use the same belts. They recreate this medical, so-called medicines, drugs. And then what happened? You can see now the share had went up crazily, 2,100%. But what was amazing was that a lot of Robinhood traders pile in and trade that counter. Now, of course, this thing shows that they pile in, but they did not really go in detail whether they make money or loss, right? So what I did was I did a little check on this. Well, I would say that only a small handful of people make that amount of money. As a matter of fact, most of the people recently, even though the dollar came down, the Nasdaq and Dow Jones go up, right? Quite a few people are losing money. I'm sure I'm keeping a good track of this, and they're losing in thousands of dollars. So now think about this. If job is affected, then there's no other way to invest in other things. And if they buy shares, and think about this, if the share market do come off, then what will happen to all these people? I really cannot imagine that. So that is something that I think of. So I think that complacency has started to come into the market. You can see that back in March itself, everybody was so worried, and everything was like at the boiling level. But now, after a few months later, you can see that it's back to where we are. Now, the problem is, when back to where we are, the economic figures are worse than it is. So how can the parameter itself to be actually less stressed? Well, probably the stock market plays a very big part in this, okay? So with this itself, right, you can see in terms of fundamental, these are the main concerns that I have for this coming week, and I want you guys, traders, to be very careful. So let me just share with you this technical, some of the technical chart of the market before we wrap up this evening. Now, this obviously is a favorite question that I received since Saturday morning. Cal, there is 2 hammer right there on the Dow. What does it tell you? Now, seriously, I have not seen something like this. And I did a Google check. There's nothing about double consecutive hammer reversal bars here. So what I did was I just went through my PSV chart, go through as far as I can. Then I realized this. Back in 2017, there was almost something of the same. Almost, not exactly, but almost. And what happened is that all you do is take the highest and the lowest of these 2 candles, draw 2 horizontal lines. Now you can see, interestingly, after it was drawn, the market next few days just basically trades between this area. But once the market found strength and crossed the top line, that was where you can see the Dow Jones went all the way up to even much higher level. So the thing is this, could this actually happen? Well, what you do is very simple. There are two candles there, right? Draw the top line, draw the bottom line, all right? Then if let's say history do repeat itself, then we do actually see the market be up and down within this bracket. And of course, eventually it will choose one way. So the upside could go back to all the way to 26,000 to 27,000 and beyond. The downside, it could go down to about maybe 25,500 area. And if things get drastic, then of course I can go by a few percentage, okay? So everybody, if you take my word, you just have to take your chart, put two lines, one at the top, one at the bottom of these two candles, the highest and lowest of these two candles, and then you will have your so-called consolidated area. If the Dow Jones choose anytime, up or down, you just have to follow through with the action, all right? So this is the Dow Jones chart, okay? So what I'm going to do now is that I'm going to show you, go into the US shares, and then let's take a look here. All right, so for the US shares, you can see now what I did was I draw the chocolate bar level for all of you and to explain about how to look at it. So for US shares on the Facebook, the first one, the Facebook is now at all-time high level. It's a big gap up. So to me, Facebook, as long as it stays above 251, it should be safe. But if Facebook loses 251, this technical level, then Facebook may drop all the way to 229. I repeat one more time. If Facebook shares can maintain above 231, no problem. But if Facebook shares go below 251, you go below 251, then the downside can stretch down all the way to 229 level. Now that is going to be quite a bit of pull factor here. So, and of course, this gap is really very big. Okay, very big gap. So usually market do cover gaps. So traders, this could be a very big bonanza for you if really things comes in. Okay, so that is Facebook for you. Now this is Apple. You can see Apple went all the way up, historical high. Congratulations for those who bought Apple. Now the technical level for Apple is 408. Okay, 408. Now upside, I don't have it. Sorry, I don't have upside for you because it's a historical high. But watch the NBC for you, and most of the analysts are looking at 430 to 450. Okay, so not too sure what will happen, but then this is the level. So 408 will be the technical level. Now, if this comes down, the next technical level can be as low as 377. 377, 408, 377. Okay. Now, this is Amazon. Now, Amazon looks like it was going up, but no. Look at it carefully. It was a gap up, low closing. Now, very strangely, because the tech shares went up quite a fair bit. So I was quite surprised to see Amazon share coming down. So now what I'm going to tell you is very important. 3156 is a very important technical level for Amazon. If Amazon shares go below 3156, then the next level it can drop is about 3022 level. I repeat, 3022. Now watch my KSI. My KSI is red in color. So this tells me that, right, if there's any, if Amazon share do come down, break below OP, generally speaking, there will be some selling pressure coming in for Apple, for this Amazon, all right? Netflix, interesting, have been sideways for the last 3 weeks. And KSI is red, so this tells you that the market has not strength going up. So the technical level for Netflix will be about 502 level, 502. And the downside level can stretch about 456 level, okay? So just think about that, that's Netflix. Now for Microsoft, this is whereby I told you before, right? That's why I draw those lines because of the deadly accuracy. Now last week I already said that Microsoft, if it comes down, the first support will be Google shares. If Google shares come down, it will be supported at 1453. And you can see incredibly on Friday, the market came down and it hit the technical level precisely and staged a rebound. So this chocolate bar theory, the one I said earlier, that I use it on the US indices, gold, works, right? It also works very well on the US stocks. So by doing this homework, right, you guys can actually know where are the key technical level to watch out for. So today I share this with you now for Google. the technical level to watch out for will be at 1453 level for Google. All right. If Google loses 1453, then the next level could go down to as low as 1418. Okay. All right. Now, at the moment, the KSI is green, so maybe the downside is not there yet, but anything can happen. Just watch out for that. That will be the Google. Now, for Microsoft, I mentioned to you 2 weeks ago that this 197 is a very strong technical level, and you can see it really got supported back then. 197, very beautiful, rebounded. So you can see that next time if Microsoft share come back down to 197, if it stays there, recovers, you can go in for a short buy. All right. Now the upside could be 208. The upside could be 208, okay, because based on the chocolate bar theory. But the KSI is red in color, so the market will cite the selling whenever there's opportunity. And then got signal for sell, the boys will come in to sell. Okay. Last one is Tesla. All right. See, back then I told you guys Tesla was trading around here, about 1617 level. I draw for everybody, and then I say that, right, if Tesla shares to come down, Tesla share might come down to 1363 level. Now, how I get that is because this is a yellow bar, and then you use the extension line for chocolate bar theory. In a way, you can see, interestingly, the market stops there. All right, very interesting. So Tesla 1363 is a very critical level for it. Now, if Tesla loses 1363, then the next downside could be on to 66. Now, based on Friday, I did mention Tesla should have a support level of 1418, and really the price really came down to near to there. All right, the low was 1419, just missed by $1. So of course, on the flip side, if Tesla shares recover, Tesla share may go back to 1509 level. All right, so these are all the key technical level you can take down. Hit the high, hit the level here, couldn't go up, they'll be selling. Hit the level at the bottom, cannot go down, there'll be recovery. Okay, all right, so that is Tesla. All right, basically that's all for this evening. All right, just to summarize everything once again, for the month of August, traditionally, usually the dollar index will be stronger than normal, so this is something to concern for. So if, let's say, the fundamental has shown that if the dollar index do recover or strengthen, then what will happen is that the tech shares will come down. Now, if the tech shares do come down, then obviously it's all right, the general market should come off. And of course, if the dollar index goes higher, then gold may also be pulling back. All right, and we also know that the stock market come down recently, the gold also follow through. So that's why my point is this next 2 weeks, 3 weeks, right? Please watch the dollar index carefully, closely, and whatever I say really start to manifest, guys. You just have to take precaution. Just be careful on that. Okay. All right. So my 10 intake is coming on the 22nd of August. This will be the last chance to pay for the price of 988. Okay, typo error, 988. So guys, if you like what I shared today and you think that it makes a lot of sense, then contact your friend, contact us, and join my class on the 22nd of August. All right. Of course, if you want to get the market analysis, my live Telegram calls, buy, sell calls live, you can also join us. And to join us, you need to pay the price of $988. Okay. All right, guys. Thank you very much for this evening. I hope you enjoyed this session. Okay. If you have no more questions for me, I will sign off for tonight. Okay, guys. Thank you very much for this evening. I will see you once again. For PSV members, I'll see you tomorrow morning. And for those weekend crowd, I'll see you next Sunday. Okay, guys. Take care. Thank you very much. Have a great night. Good night. Bye-bye.